All right, welcome everybody to another OkieTradez study session. First, I'd like to start off with my only trade of the day, a pretty solid winner. And I actually sized up on it and pretty much nailed the top too. So proud of this one. But a big fumble, a big miss, huge miss, which I guess forever upset about from now on because been steaming about it all day and I can't seem to quite shake that. And I actually think that's a good thing. I think I found a new drive here. I don't know. I thought I was already pretty driven. I study every day, every weekend, but I don't know. Maybe I got the eye of the tiger now. But let's get into this chart here. So what are we looking at? We're looking at a first bounce day, but anytime I look at a daily chart, the main thing that I want to start off with is that I don't want to see volume above the entry. So as you notice right here, there on all this chart, you don't see any volume, at least not volume enough compared to this. So when I buy a stock based off the daily chart pattern, I specifically want to make sure that the volume is going to be a lot more now than what it was any previous chart above it. Obviously, if the chart's at all-time highs, then you don't have to worry about that. But if a stock's really beat down, we want to make sure that it's trading the most volume by a long shot at the moment of your trading it. Now, you can tell that it's going to have a lot of volume by the previous days. You can't just wake up in the morning and say, well, I need to see the volume first. No, you know the volume's going to come in because it's been trading with volume. So obviously we have the multi-day breakout here that was good a couple days ago, week ago or so. But first bounce day, what am I looking for? So now that we've established what kind of daily chart we want, let's look at the daily chart pattern itself. We want to see a stock that's made a multi-day move with strong volume, and it needs a multi-day move is something that's went up over multiple days. Doesn't have to be straight up in a row. Matter of fact, the longer it goes up, more sideways, like roughly these only take about 1 week, 2 weeks max to go supernova. So I would say this is kind of a supernova pattern right here. And after we go supernova, we're looking for the first green day, first bounce day. So we're looking at the multi-day move. The stock goes up a couple 100%, so from 2 to 21. And then after the big red day, we need at least 1 or 2 more red days. But notice how this one didn't fall too far and it held up pretty much around the midway of this candle. So that was showing it was pretty strong. Had it kind of went down a little bit more, if it was a bigger red day, I would have needed a smaller red day to kind of tell me, yeah, this is about to curl and I'm looking for the first bounce day. But it didn't pull too far. It had a big red day here and then gap down, didn't pull too far. And I was expecting the first bounce day today, which we obviously got. Now, how do I play this on the intraday? Now, when I'm expecting a first bounce day, my goal is always to, one, make sure that it's green on the day. So when it opened up red, I needed it to spike green. And when I saw that, ideally it gaps up and we don't need it to spike. You get bigger wins when they just gap up a little bit. But this one spiked green, so my rules are I like to do first high of day entry, so a high of day break, dip and rip, whatever you want to call it, versus either low of day or last best dip. So just kind of like the multi-day breakout. Now, obviously, this is low of day. And once we had this spike and it didn't go any higher, this is obviously high of day. Once it pulled and held, this is clearly the last best dip. Now, what's more obvious? Do we want to risk last best dip or low of day? In this situation, last best dip is clearly the best risk to risk off of. So I just had a buy stop order and I got long right here. And buy stop order is really key here because this is a new rule that I have of mine. If it's a daily chart pattern and I see an entry forming, just put in the buy stop order. And it's the same as stopping out. So if you have a stop limit order, whatever, like, so say I buy right here, I could put a stop that if it goes under 927, so if it shows 926, it'll stop me out with, a limit of say like 915, give it a little bit of room. Okay? So you can do the same thing with the buy order. It breaks. So say you set, this is what I did. I put the hive day was 10 exactly. So I put a buy stop at 10:02, 10:01, something like that, with the limit order of 10:10. And it filled me at like 10:04, something like that. And then obviously I already knew my risk. And so my target on these are my entry versus my stop times 3. So my entry was 10, my stop was 930, so 70 cents. So take 70 cents times 3 equals $2.10. So add $2.10 to 10 and you get 12.10. And it spikes right up into a halt after I get in, and lo and behold, 12 is, where was the exact top? 12.18 was the exact top. And basically as it came up and stuffed through 12, I just sold right there at 12 and was done with the trade basically. So overall, that was a perfect trade. Went 3-1, just exactly like I expected. And glad I didn't get greedy and I sold into the 12 push just like I was supposed to. Now, KULR, this is the big miss here. So we see a chart with that's been beaten down, but there's no volume above it. And you can see that there's all this volume here compared to the rest of the day. And this is basically just repeating the same step, like we have a multi-day breakout here, and then we have a multi-day breakout here, and then obviously it was setting up right here at 47 was the entry, or the multi-day breakout level, so 47. Let's draw that. All right, so since we opened up so close to the breakout level, I knew, all right, what's the plan, right? First high of day versus low of day or last best dip. And in this scenario, there is no last best dip. Low of day is the only situation, so that's why I say last best dip or low of day. So it would be 43 entry risking 41. All right, so now I'm not looking for 3-1 on this setup. I'm looking for, I base my target off of what was its best running day in the past. So let's look here. On this day right here, it went from roughly 22 to, let's just say 42. So 20 cents. So today, my goal would be from low of day, add 20 cents to that. So 41 plus 20 cents equals 61. So my target, which I said in chat, was roughly around 55 cents to 65 cents. And that's kind of like the scale out zone. Now, I was just sitting here watching this right here, and I was actually going to take a starter right here. And as it busted, I was putting in my size, and as it busted through, I was like, oh crap, and I had my size ready. And as it was coming through 43, I had an entry of 44, and it breaks through, and I click it, and I get no fill. And because the best bid was at like 445, and mine was sitting down here. And then once we were up this high, I chickened out and pulled it off. Should have just kept it, and I would have got filled at 44. But I expected it to kind of go lower, and it did. but by the time I was putting in my new entry, I was going to go for 435. It already had dipped and came back up, so completely missed that. And then I was just going to buy it again at 44, but then my internet went out. And I'm not going to blame it on the internet because I should have just been long here. What I should have done is put a buy stop order at like 0.4305 with a limit of 44, and then I would have got filled 435 no problem. I was just probably a millisecond late on the click, and then I paid for that because this is obviously the hottest pattern in the entire market. So again, the entry is first high of day versus low of day, or last best dip, in this case low of day. So 2 cents risk. Basically you could take 10,000 shares, or let's just say 5,000 shares to make it $100 risk. And if you get a 20-cent rip, which is the target, so what did I say, 61, then you would potentially make, what is that? So let's just do the math here. 5,000 shares times 0.2. You made $1,000, 10 to 1. That's exactly what I'm looking for on wedges, so you can't sneeze at that at all. But yeah, $100 risk, make 1,000, and that's basically what I whiffed at on today. And again, I should have got these dips, but the internet went out. But had I been in here, I wouldn't have been worried about it because I would have just had my stop set and had so much volume you could set a hard stop. So new rule of mine is if I have a daily chart pattern, then once I see my potential entry, set a stop buy-in order so I don't miss the entry anymore, because I refuse to miss another good entry like that. That was just too good of a trade to miss. All right, so done with my crying here. Let's kind of look at see if we can't find any more wedges today. There indeed was a couple of them. What I'm looking for to draw my lines, or I want to see spikes that have a volume spike that's clearly stronger than the rest of the recent volume. So you can see a little perk right here, a little perk right here, and then you want to see a big spike correlate with the big volume spike so you can draw lines on both of them. So we got a line or a big volume spike here and a big spike here. So we can start a line here. Oops. And then now we're just kind of waiting for another volume burst and another spike up so we can draw our next line. We get a volume burst, but no spike up, so we can't draw anything. And it pulls back, we're not looking at it, and it's spiking back up, but we're not seeing a volume burst, so we're not looking at it. But then we get this big spike up and a volume burst, so we're interested. However, we have to see a dip above VWAP. That's a rule for a wedge of mine, so I'm not looking at it right here. But then what do we see right here? We see a clear volume burst, clear, and then a clear spike. So now we can draw our lines. So draw from here to here. We have this volume burst right here, so then we can draw a line from here to here. So we have a volume wedge, and now we have our wedge with a dip above VWAP. So this is a clean entry. Now, if you just took it here, that's fine, but there also is this one. This mini wedge. Sometimes when you get these big, long, all-day wedges, you'll get a mini wedge to anticipate. And notice there's a mini volume wedge. And notice how the volume burst breaks the volume wedge at the same time this breaks. And that tells you that you need to hold at least. And so what's my target on these wedges right now? Used to be 10 to 1, but that's only in the hottest of market, so we're not there yet. So right now, what I'm looking to do is sell into the second push. So what's a second push? Like, all right, you buy, here's the first push, pulls back, second push, you sell. And yeah, it goes a little bit higher, so what? Move on. All right, so again, like, all right, we're starting a wedge here. We got good volume wedge starting, but then notice like this is too V-shaped, so we need something more sideways, and we kind of start to get that. But before we can get it more sideways, it just dumps right here. Okay, so now at this point, we need a volume burst and a spike to get us back interested. So here's a volume burst, but not a real spike, so not interested. And that helps us to avoid this big dump, right? And then it spikes up, and we're like, okay, now it's strong. We just need to keep an eye on for our setup. So now we have an established volume high right here, volume burst, with an established spike right here. So we can start our line. Now we're just waiting for another volume burst with a spike. Here's a volume burst, but it's on a dip, not a spike. Ah, here we go. We got a volume burst. And is it with a spike? Yes, it is. So now we can draw our lines. And I hope this is making sense, because this is actually really helping myself out too, to see like how to find your entry and avoid stupid wedges. So now we can draw that. And we would just buy it as it breaks right here. First push, holds a little bit. Second push, you sell it. And so what? It went a little bit higher. I don't care. Just move on. And I want to look at this one because this is the kind of mess that I'm talking about. Like, there is a wedge here, right? But look at this big wick. Completely avoid something like that. And that gives you this nasty, choppy results, right? So just wait for clean action. And we start to get clean action right here. But I feel like this entry, I don't know, maybe I'm wrong, but it's a little bit too wide. So you'd have to go, what is this, 12.40 versus 12.10? Well, maybe not. So 30 cents, you'd want something like $3 a share, 12, 13, 14. So no, I guess that is pretty clean. Yeah, I guess that's clean. All right, so let's look at what's the formula say, right? We need a spike, right, with a volume spike, okay? And then we need another spike with a volume spike. Yeah. Yeah. No, see, because this volume spike isn't higher than any of this rest volume. Yeah. Okay, I see. That's why that wasn't avoided me earlier. So this is kind of that in-between scenario where I'm not sure about yet. Like, okay, it does work. But I feel like there's some other situations where this wouldn't work. I don't know. But this is a good learning point. Like, you do see the volume wedge, and you do see the pretty clean wedge right here, and then you do indeed get a solid move. But again, I would sell the second push, so I would probably end up selling it right here, and it wouldn't even be that great of a victory after such a wide risk. So, the best looking entries, best looking risks tend to lead to the best results versus these sloppy kind of, you're not sure about entries, probably just better to avoid. And so what, it worked because it didn't work that great. Let's just be honest. Then, what did I see? Was there anything in this one that I liked? I forget. Yeah, so this is something I would avoid. Like you get a big spike up and then you get this wedge up after a long spike like a flag. I would just avoid that. And then I would avoid this too. And this easily dump right here could have happened right here. Hmm. Yeah, this isn't even an example I wanted to study. I guess I just forgot to delete this one. But I guess you could just say that this is a good example of why you don't want to trade something that doesn't have volume spikes to give you an extra line to draw because it just chops you all day. So let the volume guide you into your trade. And that's kind of going to be my last tip of the day. All right, y'all. Hope you enjoyed this study session and hope you don't have to blow a big trade to get you dialed in, get you that eye of the tiger. Just come ready. This is like everything's on the line. So, you slip up 1 second and you can miss a huge trade. Like that could have been a $10,000, $20,000, $50,000 trade for me down the road. So I'm looking at it in those terms and just trying to hold myself to a higher standard. And I hope y'all do the same. All right. Take it easy.